Welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets. And I'm breaking them down to bite-sized pieces. Today, we've got some great stories about mass adoption. First up, Ethereum token is working with retail giant Nike for a cashback rewards. And I love to see these stories because mass adoption is coming also. Institutional investors VanEck, MBIS, and CryptoCompare launch a Bitcoin benchmark rate, which is going to be great for other institutional investors to get into the game and finally feel comfortable. And finally, what's going on with Coinbase? Yet again, Coinbase shuts down during a highly volatile trading session of Bitcoin. And the question really is asked, why does this keep happening to a billion-dollar company? But let's take a look at the market, see what's going on. So Bitcoin recovered nicely, I guess, 9,600. Ethereum holding strong, 242, looking good. Ethereum Tether flips with XRP yet again, and XRP at 20 cents. Bitcoin Cash, SV, Litecoin, Cardano up almost 60% for the week, thanks in part to the launch of its mainnet, as reported by Charles Hoskinson. Hopefully, we're going to see that around June 30th, sometime between that and July 7th. So we will see. But one thing I want you to note, take a look at, under these last 7 days, the graph or the chart, look at that nice pattern that is formed there. Looks like a nice, big, huge, fat run-up of manipulation. Then it went a little bit sideways and everybody was happy, and then boom, down it drops. Same thing with Ethereum, same thing with XRP, everything else. So when we talk about manipulated markets, I have no proof of that, but it seems to play out. Let me know what you think in the comments section, but let's move on to today's story. So first up, Ethereum token powers crypto cashback rewards for retail giant Nike. And I like to see these stories because it's all just about moving the needle to mass adoption. So the story starts off with Nike's latest crypto-friendly partnership gives shoppers up to 3% in crypto and 9% in cash rewards for making online purchases. And I got to tell you, that's way better than my credit cards, any of them give to me. So 3% in crypto and 9% in cash rewards. You know what? I'll take that all day long. The footwear and apparel giant is collaborating with London-based Plutus, a finance app that allows users to manage both fiat and crypto from the same user interface. And of course, this is definitely not in America because it's cool and awesome and everything comes late to America. Users who spend euros and British pounds, there you go, to buy Nike merchandise and their Plutus brand of Visa card will earn Pluton, an Ethereum-based loyalty token. So I know this isn't like a huge story or a big story, but if you take these all together collectively, you see that the needle is moving in the right direction, and we really are going towards mass adoption. Now, me, I'm kind of lazy. I would just like to have a physical credit card that will automatically pay me back in cryptocurrency. And I took a look at the Fold app, and that was just the app. Now they're coming out with their own card, and I can't wait for that because it just seems like it'd be simple to me. Go to a store, swipe the card, have Bitcoin in my account, done. That's it. I don't have to think about it. I got 1,000 other things to do. So when I take a look at that, well, actually, let's just jump on my phone. I'll show you what I'm talking about. All right, let me record this. So this is the Fold app itself, and I'm just going to click on check it out. And here's the actual card. So I got to go on the wait list. Sure, click on that. But here's what the card is. So it's a physical card. You earn Bitcoin, not points, and you just swipe it, and then off you go. So that's pretty cool, right? You just swipe it, you get Bitcoin, automatically comes in. The problem is it's just not available right now. And then you got privacy and all that stuff and get the card. And I got to join the wait list. So I've been doing that. And I'm still waiting. It's been about a month or so, so we'll see what happens. But I think it'll be great when it comes out. So yeah, that's it in a nutshell. I mean, it looks good. Hopefully it comes to fruition sometime soon because I'd love to use it. And again, it's all about moving the needle. So here's another example of that. I was searching on the internet because I got a problem with my air conditioning unit. It's going to be 103 today in El Paso, which is lovely weather. And of course, my air conditioning unit isn't working perfectly. So I took a look at AC repair, and this one popped up in my feed, Bob's Repair. And I think it's because I'm in El Paso, but this 702 is from Las Vegas. It's probably a glitch because I used to live there. But I was like, all right, let's see what they got. Maybe they got something in El Paso. But I was just scrolling through it, and when I noticed I was like, oh, steam it. That's interesting. And then I kept going, and I'm like, view smart contract. What the heck? And I keep going down. Contractor is great. And here it talks about using blockchain internet 2.0. So these guys, it looks to be like more like an app that they're using to hire contractors, eliminate the middlemen, and give you a great discount. Apparently, that's what it says. So I thought, well, that's pretty cool. And I took a look about us, and I'll be damned if they don't have a token sale. So I'm like, there is mass adoption all around us. We just got to open our eyes. I just thought it was amazing. And then I was like, well, hold on. Let me take you know what? I wonder if they're actually listed on CoinGecko. So I took a look and I searched up Bob. And I'll be damned, there. Bob's Repair, ranked 799. Bunch of contractors get together and they're on the blockchain. So good for them. I love to see these stories. And if you got anything else like that you see out in the wild, let me know in the comment section. I'm like, that's amazing. Anyhow, let's move on to, I think, the big story. So next up, VanEck's MVIS and Crypto Compare launch Bitcoin benchmark rate. VanEck company, MVIS, and cryptocurrency data provider Crypto Compare are launching an hourly Bitcoin benchmark rate, which has been developed in close cooperation with cryptocurrency bank SEBA, S-E-B-A. And what they're going to do, they're going to aggregate Bitcoin transaction prices on the top 5 trading venues included in Crypto Compare's exchange benchmark and disseminates each hour. There's a reason they're doing that. It's because they want institutional investors to come in and feel comfortable that the price that they are getting is actually accurate. But before we move on, I think it's important to note about who is VanEck and why is this so important? So VanEck is old school institutional investors. They were founded in 1955. It's a management firm headquartered in New York, and they've got offices all over the world, Frankfurt, Germany, Australia. Great. So big company, and they got about 50 billion assets under management. But the big thing is that they are really big gold bugs. They were, one of the big guys to do gold investing, gold bars, probably silver. I don't know if it's there, but they're big, huge gold bugs. And what's interesting about that is that just recently, 4 or 5 months ago, they put out the investment case for Bitcoin, which is odd to see a gold bug, old school institutional investors put out a report just about how awesome Bitcoin is. And it was interesting to note because they compared everything, and they took a look at gold, US dollar, and Bitcoin, and they just said, look, Bitcoin is the clear winner. Now, there's some obstacles that they talk about in this report, but you can tell that they are pretty much going all in. And then this article really just proves that point. Anyhow, moving on. Licensed crypto bank SEBA will be using the new rate to launch further products for the digital assets market. Daniel Kuhn, the bank's head of asset management, emphasized it is essential for derivatives on cryptocurrencies to have a representative reference rate, which is robust against market distortions and manipulations. So before we get to that, I just want to share with you a graphic that I love to show, which has been updated, thankfully, on May 27th, just like 5 or 6 days ago. And this is a graphical representation of all the money in the world. I think it's pretty cool. So just so you know, each square is worth 100 billion. Got it? Easy peasy. So silver, about 43 billion, just pennies. Cryptocurrency, again, very small, pennies, doesn't really matter. Here's military spending for America, China, and everybody else. U.S. budget deficit, fiscal year 2020, you got 3.8 trillion. Coins and banknotes, the Fed's balance sheet, which is going up. Billionaires, look at all these guys. Ellison, Zuckerberg, Gates, good for them. You got gold, which I thought was interesting because this part right here, it says 47% is jewelry. And the rest is, private investments and holdings and things like that. But then right here, below ground reserves, they don't know what that is. And I can just tell you that even though gold is scarce, they have no idea what's underneath the ground. So it may be scarce, but it's not finite like Bitcoin and other cryptocurrency digital assets. So that is, I think, one of the big selling points for me as far as Bitcoin, because you can't make more Bitcoin and you can't make other digital asset cryptocurrency. You can't just keep going into infinity. Well, some you can, but most you can't. So That, I think, is one of those discussions for gold versus Bitcoin. Anyhow, Fortune 500, you got these monsters, stock markets, money supply, 7% is physical, 93% non-physical, which is what we're seeing with the Federal Reserve. They're not printing money. They're just moving decimals, and it's all digitalized. So that's what's going on. And then global debt, 253 trillion, which is 322% of the global gross domestic product. Triple of what the debt is. That's amazing. I'm sorry. The debt is triple of what the GDP is. Amazing. So then you just come down. Global real estate. I thought this was interesting because residential is 220 trillion, commercial 33 trillion, agriculture 27 trillion. So when we're talking about tokenizing assets, do you see a nice little correlation here with these types of properties? I sure do. It would be nice to own part of a skyscraper and just tokenize that. Just saying. And then moving down, global wealth. Sure, a lot of countries got a lot of money. Fantastic. Here's the big thing, derivatives. At the top, the gross value is 11 trillion. Great. The notional value is, pretty much what they can kind of surmise. What really is it? And there's two estimates. The low end is 558 trillion. And that's a lot of money. That's a lot of different things going on in the markets. Now, here's where it gets interesting. This is the high-end estimate. This is the thing that we think it could be between 550 trillion and maybe 1 quadrillion. I didn't even know that number existed until I got into cryptocurrency. I'm like, there's that much money out there? Yes, apparently so. So when we talk about, is there a market for digital assets and cryptocurrencies looking at relation to the wealth of the world? Yeah, we're right here. So I think there's room to grow. Let me know what you think in the comments section, but let's move on to the article. Moving on, Crypto Compare's exchange benchmark had launched in response to the growing concerns sparked by research revealing that a significant number of crypto exchanges worldwide use what's called wash trading and other strategies to artificially inflate trade volume. So real quick, if you're not aware, wash trading is a form of market manipulation in which an investor simultaneously sells and buys the same financial instruments to create misleading, artificially activity in the marketplace. So an investor will place a sell order and a buy order at the same time, and it's kind of, just artificially pumps the market, and it's bad news for everybody, and there's bad actors everywhere. So that's a problem, and this was the data that they had found. So what did they do? They said, look, we're going to have an aggregate, 5 different prices which we're going to gather around, and we're going to give these institutional investors one solid price, and that is what they're going to trade on. And it makes sense. I mean, if I was an institutional trader, I'd be like, hold on, wait, you got these other exchanges that who knows, there's no regulation. It's the wild, wild west. I'm not going to, put my money into that, especially with all these different pumps and dumps. Get out of here. So this makes a lot of sense to me. And again, I think it's just more proof of institutional investors coming in. And on top of that, last month, major industry players claimed they have witnessed an acceleration of institutional interest in the crypto sector, attributing it to factors that include Bitcoin's recent halving and concerns over possibly inflationary monetary policy in the U.S. And that's what we see with the Fed printing money. Well, not printing money, just moving around decimals. No big deal. So to finish up, I believe every day that more and more institutions are coming in. They're coming in hard. Now, I thought it was going to take a little bit of time. It was going to be a slow progression, but it seemed like we're going from 0 to 60 real fast. And you can just see the signs all around us. I mean, even from the stories about mass adoption with the Ethereum and and Bob's Repair and everything else. But if we take a look, I mean, we've got even bigger players. Fidelity Digital Assets, 2.4 trillion assets under management. You got Ameritrade with 1 trillion. You got the big guys, Grayscale. They are buying up 1.5 times all the Bitcoin that is being produced by miners. So they're gobbling up all the miners' Bitcoin plus anything that you're probably selling because they're dominating. And when we talk about institutional investors and how things are growing, this was a report put out in Q1 2020. And you can see right here, they had 2.2 billion assets under management. Now they have 3.7. That's in a very short amount of time. So they're almost looking to double, and they're doing a great job. And where's the money coming from? Well, the majority of investments is 88% came from institutional investors dominated by hedge funds. And that was just in the first quarter. And this wasn't a fluke, because the last year, majority of investment, 79%, came from institutional investors dominated by hedge funds again. So you're seeing a massive shift for these institutional investors coming in, buying up things, want to be a part of it. And that's kind of where smart money goes. And when I take a look at, like, am I doing the right thing? Did I invest too early, too late? What's going on? First of all, you're early. If you're watching this video, congratulations, you're early. And the future is bright. I think things are going to, just accelerate as time goes on. So you have this, and also you had a gentleman by the name of Paul Tudor Jones. And he is I'm not a big investor, big trader, but apparently he was like a legend in the 80s. And he came out not too long ago on May 8th and said, look, I'm taking 2% of my traditional monies and all the different things that we are involved in, and I'm putting it into Bitcoin futures. And they have 21 billion assets under management. It's not a lot of assets under management, as we just saw, I mean, as far as like Fidelity and everything else. But what it signals to the rest of the traditional markets is like, look, this legend who made a ton of money back in the 80s, he's making another big play into an emerging asset class, and we should probably get into it. And I think that is just part of moving the needle into mass adoption, moving things in that direction. Now, I could be wrong. Let me know what you think in the comments section, but that's how I see it. Anyhow, that's it for that. Let's move on to the last story. So, Coinbase, yet again, shuts down when Bitcoin gets volatile. And we need to take a deep dive look into this, because this is just, it shouldn't happen, and it is happening, and we need to start to focus on what's going on and to actually chart it. So Coinbase has gone offline 4 times in 3 months. June 1st, when Bitcoin was 9,600 to 10.3 in less than an hour. The Coinbase users got this nice little error. Unfortunately, Coinbase is temporarily unavailable. That's a bummer. Then on May 9th, when the price plummeted nearly 2,000 under 24 hours, and I'm like, it's nothing. I mean, yesterday it went in 3 minutes, dropped $1,500. So, yeah, what do you think of that? Anyhow, then on April 29th, Bitcoin went up 12% to $8,600, and on both occasions, Coinbase users, once again, were unable to trade any digital assets. And here's the problem. The issue wasn't resolved back then, even following the March 12th different bloodbath of the huge dip when it dropped to the 3,000. So Coinbase users couldn't even offload their Bitcoin as it was dropping to the ground. Now, maybe this would actually have been a godsend for some of them. Hopefully they all just said, I'll just hang on to it, and then it rebound back to 9,500. But you didn't have that choice, you didn't have that option. I think that's a huge problem. So what's going on? This comes down to the why. So Coinbase's status page, it said it was nothing more than connectivity issues for June 1st and May 9th and April 29th, and there was just a little small network congestion on March 12th. And I find it unacceptable. I mean, I do. We covered this in 2 other videos, and we even took a look at Coinbase's blog, which was it was written by Jesse Pollack. He's the head of engineering, and he made some good points. And to me, I'm not an engineer. I'm not a lead tech. And I was like, is this English? I don't know what this is. So in our video, we talked about it, and I just put out to the IT people and any kind of programmers that said, look, does this make sense to you? And the consensus was like, look, it makes sense what he's saying. However, that should never have been the problem. This is a $8 billion company, and they should be able to pay for either more lead techs, either more space, either more servers, or at least to be more proactive and hire people around to think about scenarios where they could say, this might happen, that might happen, this could happen, and then go into effect and take care of those problems before those problems happen. That is what big companies do, especially billion-dollar plus companies. And I think there's something going on. I don't know what it is, but I don't like it. Anyhow, back to the story. So, Twitter user Crypto Whale posted a chart, and I am always leery about including these, but it is pretty interesting. He speculates that Coinbase has a built-in algorithm to automatically shut down trading anytime there is a Bitcoin price movement over $500. And he just kind of lays it out. He's like, look, this is 29th of April, 9th of May, 1st of June, and it happened every single time when it went over $500. So What do you think in the comment section? Do you think that Coinbase is nefarious enough to put that in as a safety measure, or do you think it's just a glitch and these things just happen and Coinbase is doing their darndest to really shore up all their problems and it'll be okay and we just got to trust them? Let me know in the comment section. Let's see what you say. Anyhow, lastly, to finish up, Dan Gambardello from Capital Venture asked simply, how does an exchange with an 8 billion valuation crash every time Bitcoin pumps 5%? And I just talked about that. I'm not going to say it again. But on the flip side, crypto exchanges, even larger ones like BitMEX, do have problems with user access during price swings. However, Coinbase seems to be having this again and again and again, even in June 2019, and when it went offline and the price of Bitcoin fell $1,400. And then lastly, it says that Cointelegraph is waiting for their response and they'll update the story if that ever happens. And I just said, look, pal, don't hold your breath. This is actually so bad. I feel like we need to track it. If you notice in my videos, I say the same thing over and over again. I don't know how many times I've talked about this nice little graphic, even though this one's updated. I've talked about Fidelity. I've talked about TD Ameritrade. I talk about Grayscale like all the time. And in my other business, I do online education for nursing students to pass their clinical exam. And I know one thing about education, and that is you have to repeat things, because if you just hear it once, it's kind of tough. But I repeat things over and over and over again so people can get it into their memory about what's going on, because you got 1,000 things going on, right? You got to work, you got your family, you got time for entertainment somewhere, you're trying to pay taxes, you're trying to do all these different things. So this one video, I mean, sometimes we got to say things again and again. And I feel it's the same thing with this problem with this Coinbase shutdown. So I've actually created a second playlist, and I want to track this. I want to see what's going on with Coinbase, why this keeps happening. Because even this right here, this nice little blog post that's put out, you would think, this was on May 14th, you would think they would have implemented the changes and gotten through with it, but obviously not. So that's concerning. Let's see what happens. And that's it for today's video. So thanks for sticking with me. Hopefully I can shorten it up in post and make things a little bit quicker. But I do want to say one thing, that is I want to thank everybody who's been my supporters. So underneath, there's a little join button. You don't get anything special. I don't hold anything back. There's no like private members area or something like that. It's kind of like, it should just say tip, honestly. And level 1, those supporters, they tip me a couple bucks. They join up for a couple bucks and just their way of saying thanks. So I appreciate it. And level 2, they say they pay a little more, so I give them a shout out. So all right, Soft, thanks. I appreciate it. When Mullet helps me hold it down, the premieres. Myself, who else? Dave Plummer, Straight Talking Guy. He's got a YouTube channel. Check him out. Grant Sharman. We've also got Bruce Wood. That's a good name. Baking Benjamins, Noah Flippin' Vegas, Martin Lewin, Michael Ralph, William Hallow, Crazy Crypto Canuck, Tessie Ryusaki Positive. That's a good name. Fire Swing Golf. And finally, JC Durex, Crypto Veritas, John Miller, The Office, El Merg, and Michael Jeffrey. To everybody, thanks for the support. I really appreciate it. All right, that's it for today. Thanks for watching. See you on the next one.